Good morning, everyone, and welcome to the Ankerstar Wealth Morning Update. I'm Steve Ankerstar, your host. Allison has the day off. It's also graduation day for Allison. Congratulations. Today, we're going to be talking about all the blood that's in the water this morning. It's pretty ugly out there, but specifically, Abercrombie and Fitch missed earnings and is down 30+% and dropping. Snapchat pre-announced earnings, and we'll talk about the strategy of pre-announcing. That they're going to miss earnings when their earnings roll around. They're also down 30% and dragging down a bunch of favorite social media names with it. And lastly, there was a downgrade in Tesla, and you don't hear that a whole lot, but I think they make an excellent point as to the future of Tesla stock. So that's what we're going to talk about this morning. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. All right, let's go ahead and take a look at the futures this morning. Just brutal. So there it is across, red across the board. NASDAQ almost down 2%. So, what does that say? Well, that was the rally yesterday, right? And, people say, do you buy the dip as the bottom in? I mean, there's lots of different strategies. I've always contended that we're in the area of the bottom. I'm not going to pull the overall chart today. We can save that for another day, but it keeps going back to the same kind of resistance levels, which is good as long as it holds. That means we're in the vicinity of the bottom, and any buying you do from now, on or so, then you're getting a good price on stocks versus when they were 25% higher, right? So that's the overall futures. We'll keep an eye on things. I think today could go either way. It's tough to buy this dip because it is kind of ugly this morning, but people may. If it falls off a cliff, that's a whole different story, and we would address that either tonight or tomorrow. All right, let's talk specifically about Abercrombie and Fitch. Now, retail has struggled for sure, right? You have your big box retailers, so you think the Costco, the Target and Walmart obviously struggled with their earnings significantly. Supply chain issues, wage inflation cutting into their margins. Those sort of things are affecting all retailers. Some of those that are better positioned in this space would be your discounters like your Ross, TJ Maxx, Five Below, Dollar Tree, Dollar General. Those are almost recession proof in the fact that the people that shop there are going to continue to shop there. The people that shop there are generally strapped for money or cost conscious, right? That are generally going to shop at the same place no matter what's going on. But then you get in your specialty retailers, like you think Abercrombie and Fitch falls into that. Nike, Under Armour, Lululemon, if you will. Really, if their brand is strong enough, they'll do just fine. But if their brand is even wavering at all, that's when you can see them get hit hard. And that's what happened to ticker ANF here. They missed earnings badly. They posted a loss. They guided down. So it's really nothing to like as far as across the board for ANF. We will look at the chart here real quick. Eventually something falls far enough to get cheap. But I think this would be an absolute tough name to get into. Third down 31%, down to $26. Let's go to the 1 year chart. 26 closed, down $8 this morning, down to 18 and some. Just a brutal sell-off. I don't think you can hop in here going into a recession with those kind of numbers. Things are looking cheap there from a PE perspective, but no dividend. And how strong is their brand? I don't know. Used to hear Abercrombie and Fitch a lot. I don't hear it anymore. I don't hear my kids talking about it. Obviously, I wouldn't be wearing it, but I don't hear my kids talking about it either. So I think, this would be an avoid. I think there's better names out there if you were going to get into the retail space. Five Below is probably my favorite as far as the stocks that are out there. If you're interested. All right, let's look at Snap. So you've got Abercrombie and Fitch down 30%. You have Snap down 32%. Now, everybody got up in arms about Walmart and Target not pre-announcing that they're going to miss earnings. So why would a company pre-announce? Well, normally you pre-announce if you know the quarter is going to be bad, and Kramer, talks about this all the time. You should get out in front of it by mentioning that well before earnings, and then that way when earnings gets there, it's not a surprise. Well, what is the reason not to pre-announce it? Look at this reaction: 32% from from the CEO, basically offering up a preview into earnings that they're not going to be good. So kabam, right? 30% pre-market, setting it up the company for its worst day ever if it holds. That's kind of crazy. You know that I have not been a fan of Snap all along. I mean, it's a fun app or whatever, and my kids love it, and there's some functionality in it, and I've had them show me like where are the ads, and they're like, yeah, do you ever really see the ads? And they're like, well, not really. But when you look at the path here, up over 80 in September, what's that, 7-8 months ago, all the way down to $14. I don't see it. What's not being said, and that it's being speculated about in the press, is the popularity of TikTok over Snapchat. I mean, Snapchat was kind of fun for a while. The little filters and things are cute. And there's a location tracking thing where you can track your friends, like kind of like a Life 360 if you opt in or don't opt out, one of those things. But I think really when you think social media right now, it's TikTok, right? That's where everybody's going. That's where businesses are going. I don't use it for any business stuff, but there are certainly finance folks that do. They get on there and they produce, short content instead of the longer form content that I have for you this morning. And, Snapchat just doesn't offer a venue for that, like, at all. So I think it's going to fall by the wayside, if you will. Could you hop in and buy it here? I mean, you could, but I think you're smoking some hopium, is what they say, when hope is your strategy. I mean, just, losing money hand over fist. I don't know. I don't see I don't see it coming back anytime soon. But if you do, you can hop in. I don't buy the thesis anymore. Okay, last one I want to talk about is Tesla. All we have really here is a downgrade, but I think there's things to think about with Tesla stock because it's fallen so far. And the angle here is that the purchase of Twitter and Musk's obsession / not obsession, maybe that's too strong, but certainly his focus on Twitter and, buying it and making it a bastion of free speech where, it's not filtered and all that, like much of the other social media has gone through with COVID and then elections and things like that. So, and it's politicized for sure. But I think that's going to demand a lot of his time. My issue is I think there is a day when Elon Musk moves on as the boss at Tesla and focuses more on, space flight and Neuralink. And, he has the Boring company out there as well. He's got Starlink, his satellite company. He's got so many things to focus on. I'm not sure Tesla is still in need of, Elon Musk day-to-day oversight. And if he steps away from the stock, of all his companies, Tesla is the only one that's publicly traded. It's the only one, until he buys Twitter, but who knows, if he takes it private, then obviously it's not publicly traded again then either. So it's really your only exposure to get in on what Elon Musk is doing. And if he steps away from it, what's going to happen to the stock price? It's going to settle back into the $100 range where arguably it should have always been, instead of the crazy ride that it's taken. So let's take a look at the stock. I know it's hearsay to talk bad about Tesla, and folks are quick to point out I've been wrong about it a lot. Back in here, I missed the wave up to 1,200, but I certainly haven't participated in the 50% haircut either on the way down. But yeah, with all the competitors out there in the EV space, a CEO that's obviously visionary and changing the world, but could potentially be distracted by other things that are out there. I don't know. I don't see it. I love, I say buy the car, not the stock. But certainly if you hop in here, I think you're taking some risk that you think the bottom's in, and there's really there's no support for anything there. It could free fall for some time. So invest at your own risk. So all three today: ANF, Snap, Tesla. I wouldn't touch any of them with my capital. And I think if you do, then you just have to understand that you're taking a significant risk. All right, that's all we have for today's show. Thank you so much for your questions. Don't forget to like and subscribe and get daily updates. I'm Steve Ankerstar, and we'll see you guys back here tomorrow. Bye.